Hello, Market Insights watchers. In Market Roundup this week, find out what's giving investors confidence that the Fed just may be done with rate hikes. In tech megatrends, it's time to take a look at a massive trend known as the power digitalization of the US power grid. And we'll show you how to invest in this trend. And in Crypto Corner, we have great news. Andrew Prince, financial analyst for Next Wave Crypto Fortunes and Extreme Fortunes, will be joining us to share his insights on Solana, actually late breaking news on Solana, and Ian will share his latest insights on the crypto market. So let's get started. Hello, Ian. How are you this morning?
I'm good. Amber, how was the weekend?
It was a quiet weekend, so that's I like.
No,
It was
no fall apple picking? I guess we don't pick apples in Florida.
What's actually funny you mentioned that. I'm from New Jersey, and as a kid, we would go to the local apple orchard and pick all kind of red, delicious Granny Smith apples, and then go home and make apple pie. So that's a fun.
Oh, wow. That's funny. My daughter made apple crisp this weekend. She's
Oh,
3. And it's funny. We took her strawberry picking because that's the thing you do down here in Florida. They grow a lot of strawberries.
Yes.
It's hard to get her to not eat them before we wash them, though. She just eats them. She probably ate like $10 worth of strawberries last time we went before we paid. So I gave them cash.
That will make her even sweeter. So that's a good thing, Ian.
Oh, yeah.
Okay, everyone. So in Market Roundup, Friday's U.S. jobs numbers actually helped the market stage a sharp turnaround. U.S. job growth slowed by more than expected, with non-farm payrolls increasing just 150,000 versus an expected 180,000 jobs. The unemployment rate increased to almost a 2-year high of 3.9%. This data shows that the economy is cooling and starting to trend toward the Fed's anticipated course. This actually gives investors confidence that the Fed just may be done with its rate hikes. Now, what's most interesting, as seen in this chart, investors have brought forward their forecasts for rate reductions next year. Per Bloomberg and swaps pricing, investors have now fully priced in a rate cut by June 2024. Ed Yardeni, founder of Yardeni Research, recently stated, quote, "We think the stock market's correction is over, and that the S&P 500 is back on track to end the year at 4,600, end quote. And per Bloomberg, such a level would imply a 5.5% gain by the close of 2023. Now, Ian, this statement from Yardeni actually falls in line with your year-end rally prediction that you've been forecasting for a few weeks now. So how do you feel about this? You're still on that track with that forecast?
I think so. I think that like last week, we got some clues as to how the rest of the year is going to shape up. And we spoke about this earlier this week. There was a Wall Street Journal article by Nick Timiraos, if I'm pronouncing his name correctly. He's like the Fed whisperer, right? And so when he writes this article that says that the interest rates on the US 10-year note have done the job of the Fed, and they're likely to signal that there aren't going to be further rate hikes coming, that was a foreshadow to what happened on Wednesday's FOMC meeting. And you see, the market just kind of took off from there, and then it added more fuel to the rally with the weaker than expected jobs number on Friday. So the question right now is going to be like, what does the landing look like? And this is like a plane metaphor, right, Amber? Like when you're on a plane and it's really bumpy, there's always like the fear that it's going to be a hard landing. And worst case scenario, the plane obviously doesn't hit the runway. But I think the Fed is actually in a good position, more so than they've ever been in the past, because they've raised short-term interest rates to 5.25% to 5.5%. And that is like firepower, right? Remember when we used to have these like stock sell-offs or economic weakness in the 2010s, and interest rates, the short term was like at 3 or 3.5%. They didn't have that much ammo. Now they've got ammo. So it reminds me of a time I was flying back to New York from LA, I believe. It's just going on 10 years ago. And it was very calm. There was not much turbulence. And as we were about to hit the runway, you know how you're kind of bracing yourself for the landing? the engines accelerated and we took off again. And we kind of made a big loop around the airport. And the captain explained to us that when he went to land, he told us this after the flight, there was a plane on the runway, so he couldn't land. So he instead avoided it by taking off. Now, the Fed is kind of in this situation where it's like they've got a lot of jet fuel here with interest rates 5.25%, 5.5%. And if they start to see economic data really weaken, okay, and their interest rate hikes are work with a lag. So it takes about 6 months for these high interest rates to really work their way through the economy, right? You see these news of 8% mortgage rates. Well, that's not going to impact GDP in the here and now. It's going to have an impact 3-6 months down the road. We're starting to see that weakness from the interest rate increases that we had around the summertime. And I think that if the Fed sees that the landing is going to be rough, it's like start cutting rates, and that is going to send the stock market higher because whenever the Fed stops hiking rates and we finish a rate hike cycle, the average move for the market is up 10% over the next year. Now, I just want to show a chart with everyone and leave you with this because this is really interesting. So this is the QQQ. It's the ETF that tracks the NASDAQ. And you can see that we peaked in mid-July, and we've been covering this on Market Insights, that we were going to have some choppy consolidation throughout the summer and probably hit a low in the fall. This is a descending channel, and basically you're seeing it hit a support level, then go back and hit a resistance level over and over again. We almost tagged the 200-day moving average, which is like an amazing support level in the markets. It means that basically the long-term support level is usually found at 200-day moving average. The other thing I'll say is that we had this indicator last week that we discussed on this, where when the NASDAQ is down 5%, and then you get a down 2% day, that's usually like sellers are just exhausted. They're like selling everything, they're giving up. You know, you've heard like, you start hearing people talk about the end of America and that they were going into the Great Depression. We started hearing those choruses a couple of weeks ago. Since then, the market has just gone straight up, you know? And so I feel like the market has buried a lot of those naysayers. Now I'm going to leave it with one other data point that I don't have a chart of, but it concerns how much cash people actually hold in their portfolio. So in the average Bank of America private client portfolio right now, cash is about 13%. That's up from around 10% in early 2022. And the other thing is that equity allocations peaked at about 66%, and it's dropped to about 58%. Equity allocations rarely go below 56%. This is from Barron's, except during extreme events such as the lockdown in 2020. So from both a technical perspective of the Qs getting close to that 200-day moving average, people feeling very bearish, the Fed being in a good position, plus equity positioning right now, I do think this is shaping up to a very, very strong year-end rally. But I think this week, Amber, because of those technicals where you see we're kind of still in that channel, we need one more like thrust throughout the middle of the week to kind of get us out of this little range that we've been developing. But I'm optimistic about the end of the year rally.
Okay, well, we're optimistic with
All right, that was a mouthful. Okay.
No, it's great. Okay, everyone, in Megatrends, it's time to take a look at the power digitalization of the U.S. power grid. Now, digital transformation combined with electrification is spurring the transition of the entire energy sector, from power plant management to smart grids. And large U.S. utility companies like Edison International and DTE Energy are ratcheting up their investment in grid modernization. Now, according to Bloomberg NEF, spending is targeted at, quote, new technologies, which will integrate a growing number of small-scale energy resources such as rooftop solar, flexible demand, and electric vehicles, end quote. Now, for example, BNEF forecasts a U.S. small-scale solar capacity could grow nearly 9-fold between 2022 and 2050, reaching 416 gigawatts by 2050. This small-scale solar capacity, also known as connectivity technologies, include inventions like vehicle-to-grid, which is a tech that enables energy to be pushed back to the power grid from batteries of electric vehicles, and virtual power plants, which are networks of small energy producing or storage devices like solar panels and batteries that are pooled together to serve the electricity grid. Now, connectivity technologies are experiencing both at the same time maturity and emerging applications right now. Per BNEF, as seen in this chart, this red section here, technology platforms to help control small-scale energy resources had the largest share, 45% of digital activity in the US in the second half of 2022. And they also note, quote, that virtual power plants and a vehicle to grid and demand response are growing in popularity as they can help control small-scale resources to relieve grid pressure and boost reliability. Now, these systems rely on software and Internet of Things, like IoT, obviously, connectivity, using connected devices, controllers, and communication systems. For example, Duke Energy Corporation partnered with Ford Motor Company in August of 2022 to pilot vehicle-to-grid technology. Ford announced in August of 2023, this year, that it launched a home charging pilot program with Duke for EV customers to save money and support grid sustainability, end quote. And for, of course, another great example is Tesla in this space with its virtual power plant partnership with PG&E in California, and its newly launched virtual power plant in Puerto Rico, which could become the world's biggest thanks to a large Tesla Powerwall user base in the region. So what does this mean for us as investors? Well, as new U.S. policies like the bipartisan infrastructure bill have added just a lot of great girth and momentum to the U.S. utility innovation is set to actually guide more investment to digital technologies. Here are two ways to invest in this power digitalization trend. First, consider buying shares of the VanEck Low Carbon Energy ETF. The ticker for this ETF is SMOG, SMOG. This exchange-traded fund invests in companies that generate at least 50% of their revenue from renewable sources of energy and sustainability for building products that reduce energy consumption. Second, well, if you haven't already, consider subscribing to Ian's flagship monthly newsletter, Strategic Fortunes. We have currently 5 recommendations under the EV and new energy category that could push higher as trends like this unfold. So to sign up for Strategic Fortunes, please click the link in the email that accompanies this video. And if you're watching us on YouTube, please click the bull icon that will appear here over my shoulder to get all those details right here. So with that, Ian, how do you feel about this power digitalization? I think it's a trend that we should all be following.
I agree. And, this is like a long-term play, right? So I think it really tipped off in 2020. We're talking like 30-year trend where renewable energy starts grabbing more market share and our grids become more efficient and we figure out better ways to optimize the amount of energy that we're creating, whether it be through battery storage or, the way we power electric vehicles. I love the vehicle to grid stuff. The one thing I'll say is that in my career, I've seen lots of disruption, internet, cryptocurrencies, EVs, which is still ongoing. And none of this ever happens in a straight line. Like if the investment case was like in a straight line where, you buy Tesla in 2012 and it goes straight up, 100x, like it would be easy. Same thing with like the disruption that Amazon created in e-commerce. Like if you bought Amazon in 2003 and just held it for 20 years, you made a fortune. But the reality is like not many people did that because buying it in 2003, it was very volatile, so you would have months where it would go up 20 or 30%, then you'd have like 50% drawdowns, but you had to like really believe like that's where things were heading. Like there is a pretty good case for where we're heading in renewable and new energy, right? But the line is not going to be straight, just like other technologies. So we're going to have these periods like we had in 2020 and 2021 where it goes up, 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 up. And then you have a year and a half where everything drops. I believe in solar, especially right now, we're at the point that the stocks and the investment case is bottoming out, right? Also with EVs too. I mean, only news you hear is about how electric vehicles are bad for the environment and how Ford is cutting down their investment in them. It doesn't matter. Like at the end of this decade, more people are going to be buying EVs in 2030 as a percent of new cars sold than they are now. And I think that market share is just going to get better, especially when you look at like the millennial trend, right? So, the number of cars that are being bought in 2030s is not going to be baby boomers. I mean, most of them won't be driving anymore, unfortunately, or won't be with us. It's going to be millennials who are buying cars in the futures. They have a penchant for buying, these sort of new carbon conscious energy alternatives than their predecessors. And I think that's what's going to drive the needle. It's like, you want to think about who's going to be the marginal buyer of these things in the future. And then it's going to be the millennial demographic. So you have to see what they are buying, what they're optimistic about, what their desires are, and invest accordingly. And so that's how I feel about it. And I think that it's just it's like when everyone says like, oh, don't go there, that thing is dead, that's the time you want to go there. We saw this in cryptocurrency both in 2018 and 2020, and then again in 2022. It's like they say it's dead, and then 6 months, a year later, it's like everybody's chasing it to get back in because they feel like they're going to miss out. And I feel this about renewable energy right now, is everybody says it's dead, but just give it a year.
And
anyway,
words of wisdom. So thank you for that. In Crypto Corner this week, Andrew Prince is joining us. Now, Andrew, for those who may not know, is just a very steeped in the financial market. He's the financial analyst that works very closely with Ian on Next Wave Crypto Fortunes and Extreme Fortunes. And Andrew, I was reading about you, and I know about you, that you really self-taught since 2014, and you hold 2 master's degrees. So we are so happy you're here to speak with us today.
Happy to be here, Amber.
Oh, yeah.
Yeah, and one other thing about Andrew, too, is that he is a competitive power lifter. So, Andrew, what are you benching nowadays?
These days, it's not that much. It's only around 365 pounds.
Yeah, okay. All right, not that much. So if I ever get run over by a car, I need you around to lift that car off me, please.
I'll try.
So excited to have Andrew here. Obviously, he's a great part of our team. And we want to talk about Solana this week because about a month and a half ago, in early September, we mentioned how, hello, Alex. We mentioned how Solana was part of this FTX lawsuit, in the sense that the court ruled that FTX can start selling its crypto assets, Solana being a big part of that. And at the time, we discussed how usually when you have this type of news after there's been a sell-off, it leads to a bottom. The price was under 20 at that point. More recently, it's traded as high as 47. I think it's up, over the last month, 90%, right? If I'm not mistaken, that number, and about 20 to 30% just in the last week. Andrew, what are the 3 main reasons here why Solana, outside of the FTX news, has rallied so much? Like, why are people excited about this token?
So the very first thing is what is called the Firedancer update, which is going to help scale the network and make it more robust. So Firedancer supposedly is going to give Solana the ability to process 1 million transactions per second. To put that into perspective, Ethereum, after its update, is supposed to be able to do 100,000 transactions per second, and credit card companies like Visa at most do 65,000 transactions per second. And on top of that,
go ahead, finish.
And on top of that, Firedancer is also supposed to help Solana with its outages. Solana has experienced 7 major outages since 2021, which is not great for crypto when you consider that something like Bitcoin has had virtually 0 outages since 2009 when it went live. So by that standard, Firedancer is set to help Solana quite a bit, which is part of the reason why we're seeing this rally.
And in the blockchain space, and in crypto in particular, you can't have a blockchain that just randomly goes down. And I remember there were some points where Solana would be down for like 12 hours. So imagine trying to underpin the financial system, or the media environment on something that you turn on the TV and, you know, you're trying to stream a blockchain based movie or something like that, and you just can't get it. So I think that that is huge. The fact that Firedancer is going a long way to fix this. What is the second reason why people are excited about Solana?
The second reason is that some of the narrative is starting to build back up again around Solana as being a strong rival to Ethereum, because up until now, with all the issues persisting around it, it had kind of been forgotten as a rival, even though that was its initial reputation per se. And now, even though it only has a market cap of 16 billion compared to Ethereum's gigantic 228 billion, you know, it's still considered a rival and a blockchain that could pose a serious competition for Ethereum in the future.
So it's less than 1/10 the size of Ethereum, at least by market cap, but it has similar infrastructure built on top of it. And just so people are clear, Solana and Ethereum are what are known as layer ones. They're basically building blocks where you can build new types of financial infrastructure, like decentralized finance and decentralized physical infrastructure. You can build decentralized media like NFTs. And I think that is a really interesting idea, is that Solana could be faster, 10 times faster than Ethereum in the next year when Firedancer rolls out. And it's 1/10 the market cap, you know, which is it could be. The similar analogy I always draw to this is that search engines first started, we used to use Alta Vista and Lycos, Go.com, and everybody used Google, right? Maybe you use Bing.com, but not so much as Google. And so there definitely is an opportunity for another blockchain to take Ethereum's market share, if not, you know, the majority of this market in the future. We really don't know how things are going to play out in the next couple of years, but Firedancer is definitely going to shape that narrative for Solana. So what do you have for number 3? This is the one I think is most interesting because it's not really public information. You have to look for it on Solana. What is it?
That's true. Number 3 is that the number of developers on Solana is increasing. So these are people who have participated on the network and are trying to build anything from decentralized finance applications to you know, games or NFTs, any sort of project. So this number has grown 40% year over year. And so that shows that there's fundamentally rising activity in the background for Solana. So there's something actually underpinning all of this, underpinning this price rally.
Right. And what's interesting too is that the price had been going down for the most part. Okay. So usually in a typical blockchain ecosystem, like when the token rallies, it attracts more developers. There were developers moving towards Solana because they realize that it's easy to build upon, and it already has the transaction speed that they can, you know, produce games and financial contracts and betting markets and whatnot on top of it. So that to me is probably the most interesting. And I would leave it with this too, is that Solana had a big conference in Amsterdam recently called Breakpoint. I didn't go, but I was talking to a friend, and he said he's seen more Ethereum people there at a Solana conference than ever before. So there's sort of this idea that a lot of the Ethereum developers are realizing the limitations of Ethereum currently, and not really sure when Ethereum is going to get to 100,000 transactions per second speed, and just going and building things on different chains because they have ideas that they want to create, some decentralized ideas, and Solana is readily available. So those are some 3 great ideas, Andrew. Thank you so much for joining us, and we will have you on soon.
Thank you for having me.
And thank you, everyone, for watching. We appreciate you very much. And if you have any questions or comments to share with us, please email us at marketinsights@banyonhill.com. So until next time, I wish you a great week ahead. Take it away, Ian, all yours.
Well, that's it. Thanks, Amber. Thanks, everyone, for joining us.